Hello, friends. Today we'll start with a new topic. This is on money laundering. Okay, so we'll try to see something on how authorities are taking this money laundering into consideration, how they evaluate this, and various other related features from your academic perspective. Okay, so there is a special agency called as Financial Action Task Force (FATF), which actually you see again you must have seen various times that government authorities are taking action against certain politicians, businessmen who do have black money in their custody, or like let's say in an income tax raid some black money is found. So you see, in such scenario we need to go through this money laundering concept, and then there is a prevention of money laundering act in place. So we'll try to see all these things in this session. So prevention of money laundering act, this is mainly to combat financing of terrorism. In a country like India we have lots of problem, so in this particular slide you can see that currency notes, this is foreign exchange, so is lying in a in a washing machine is there where we clean clothes, so it is currency which is getting cleaned. So money laundering, if you go by the definition of the term, you will find money laundering is nothing but it is converting of illegal earned money into legitimate money. You see, conversion of black money into white money is what is called as money laundering. Now we need to understand what is black money. Black money is something on which you see you don't disclose it to authorities that you have earned it, and accordingly don't pay taxes to the government. So when government is not able to get taxes on certain income that you are earning, then it leads to black money. Okay, usually on land transactions, people buy at lower rate, sell it at higher rate, and then in your books, in your accounting, you see land are always bought and sold at a very lower price, whereas market price is very high. So the gap is like where government is losing the taxes, and hence it leads to black money creation. So money laundering in a way is to hide the illegal acquired money, and the term money laundering is said to have been originated from the mafia boss of USA, Al Capone. So in India, money laundering is popularly also known as hawala transactions. Now you see, money laundering has been used by criminals in a very creative manner. There are so many methods through which they bring illegal money into system. Okay, the first term which is coming in is structuring, also known as smurfing. Now, this is a method in which what they are doing is like they're going to place cash by breaking it into parts. Yani, let's say 1 crore rupee transaction is happening. So they will not do one transaction of 1 crore. What they'll do is like they'll split this 1 crore into, let's say, 1,000 transactions of smaller amounts. So when you do it in a smaller amount system, let's say some technology is being used to track these high value transactions. So when it is being done in thousands, let's say 5,000, 10,000, 25,000, 31,000, 41,000. Likewise, some transactions are done below 50,000. It means you break it into very small parts and then starts doing certain transactions which is out of the preview of your various surveillance system that we have in place. Okay, so here cash is broken into parts, and this money is actually like brought in into your formal channel, that is banks. And you see, what we need to do as a banker, banks are supposed to identify such transactions and need to inform it to your financial intelligence unit, which is actually under RBI, and then they will take legal action. First, they'll do an audit, will inquire the case, and if found something offensive, then they will take legal action. Now, here, next thing is like it can be bulk cash smuggling. Any we're bringing in currency notes from Pakistan through Nepal to India. Okay, so again, this currency notes which are coming in, they are printed outside, but this is something goes into counterfeit currency. Okay, illegal in nature, but this may not be directly leading to money laundering, but again it is something bringing cash in bulk quantity. And you see, usually for drugs business, for human trafficking, and for, let's say, prostitution and various other criminal activities, heavy amount of cash is being used. So you see, there is a heavy chances that money laundering is being used, means illegal money is being used for all those unlawful transactions which is not on record. So cash intensive business means sometimes when you go to certain special areas of operation, like you go to strip clubs, we don't have in India, but in USA this is very common. Or you go to casinos where like you see, you can do gambling, bars, you go to restaurants. You see all these places. It is like very heavy cash intensive areas. All these are very heavy cash intensive areas. So means you can find lots of cash and maybe scope of money laundering too. Means you do it on record, you do it off record without putting an entry. You can still earn lots of, like you can do lots of transaction. Yani this is something where you do business without issuing invoice to your party. Okay, so hence system will count them as unlawful. Now here it is trade based laundering, which is mentioning here under and overwhelming of invoices. Again, an example of it means I am selling gold worth rupee 10 lakh, but I am giving a bill of rupee, let's say 1 lakh rupee. So there is one 9 lakh rupee gold which is actually sold, but it is not accounted for, and accordingly, government is not able to get taxes on the same sale proceeds. So this is where again money laundering is happening. Then you will find the other term which is very commonly used as shell companies. So money is routed through various bank accounts, which are just there on paper. Any actual existence of these companies is not there, but on record they have been generated, and money is being put into, like either it is credited or debited. Means what we are doing is like we are just trying to circulate the money into the system through various such shell companies. Again, it is only possible when bankers are a part of it. Nowadays, you see, we have a concept of KYC, know your customer. You need to know them thoroughly. You have to do lots of verification and audit. Document check is there. But you see, when banker is ready to compromise, and then there is a issue like where shell companies can be created. And you see, hence in Money Laundering Act, money, Prevention of Money Laundering Act, it has very strict provisions for bankers. If they're caught, then they have to be very strictly dealt with. Now, round tripping is another term which is coming in context of money laundering. So what is happening is like money is being routed to certain countries by various other different countries. Like money is coming to India through, oh, let's say Maldives or some other island nation. Now you see the source of this money transfer is not been able to be diagnosed correctly. Why? Because the money is actually routed to India through various channels. So tracking them all is not possible because you don't have your connections with legal relationship with these nations so strong that you can diagnose everything thoroughly. Okay, so round tripping is another way through which you use the channel of foreign direct investment and you bring in currency unlawfully. Okay, then you don't know who is investing it actually. Then next is bank capture. Now it is again another way. You see what happens is like most of the times you'll find bankers are in close association with politicians and you see local mafias. So you see where are they parking money? They are parking in banks. I mean, in current scenario of privatization, I'm not blaming any particular institution, but I tell you, in privatization, what happens is like money is profit maximization is your goal. So bankers are given target to achieve like saving account, current account, FD, insurance. You see, they have their pressure of doing business. On the other side, you see, they have a partner in crime who are money launderers or let's say criminals who are having huge amount of cash available with them. So you see what they do is like sometimes certain bank branches are connected to these criminals in such a manner which can be quoted as bank capture. Means they have the entire control on your management, and you see what money is coming in, going out, what transactions are happening in branch is not done by bank officials. It is actually directed by these money launderers, or vice versa. Means bank managers are guiding them how to use it so that they cannot be caught. They are reading the instructions given to them by their higher authorities, and accordingly, they are advising or they are assisting these criminals to bring money into system. Then we have casinos, real estate, and black salaries. So let's discuss. You see, casino money is being circulated, real estate property, buying at cheaper rate, selling at a higher rate, and the price at which you are doing these transactions is your registered value. Usually, we have a like undervaluation, always undervaluation in property price, which may lead to black money again. Then we have this element of black salary, means fake currencies, companies. Fake companies are being created with fake number of employees on roll who are being issued salary. So they are shown as an expense to cut down the profit, and then accordingly, government is not paid their taxes in return. You see, companies making heavy profit, but they are not paying any tax. Why? Maybe they have the chartered accountants or another set of experts who are advising them what to do and what not to do. So in that case, you see, these are ghost employees. And again, you see what money is given under the name of black salary or just to these ghost employees is again a component of your income which is not getting taxed. Now, you see, we need to understand the entire modus operandi of a money laundering scheme. Here, there are three levels. First is placement, second is layering, and third is integration. If you go through the entire process, you start with placement. Placement means you are bringing in those black money from some sources. You are collecting it and you are bringing it at one point of place. And then what you do is like once you get it into a bank through different, you see, let me say that I do have some black money. What I can do is with my money is like let me open 5, 10, 15, 20 account dummy accounts where I'll start putting money in value of 35, 25, 45, 12, 12, 11, 11. Likewise, I'm doing lots of transaction on daily basis. I'm not repeating more transaction. Yani I'm making sure that I'm not depositing 50,000 or more on an input on any particular day. So because you see, if the value of transaction is in crores, then I have to wait for a very long period of time. Hence, what I'm doing is like with the help of my bank friends, people who are into banking or any other financial institution, it may be insurance or it may be any other sector. You see, what I'm trying to do is like I'm trying to have so many accounts which are fake accounts, and I'm trying to bring in money into the system, formal channel. Once you see, let's say I'm doing it for last 1 month, did almost good number of transactions in an account, 30 transactions of 40,000 each. Just imagine what is this total value in one account. So if I have 500 accounts like this, you see what is happening is like once this money is given into an account, the money can be transferred from this account through wire transfer to any other account across the globe. You see, when it goes through wire, there is no doubt. Any system will not doubt any online transfer. But if it is a cash to means you're depositing cash is where suspicious like audit is there. Also, audit is kept on. But what is happening here is like accounts are opened, money is credited into it in physical form, cash, and then later on this money is actually transferred to some other account. You see, maybe in country outside the country. This when you are doing it means when you're transferring funds between various banks, you are moving it from one bank to another bank, and like this is what is this is called as layering. We are making things so complex that audit authorities will not be able to track it thoroughly. Okay, you're confusing it by sending from one account to another account, and you see when you're doing it through accounts, there is no limit. There is no limit. It can go into crores also. Okay, so finally, what we are doing is like we are going to do an integration. Now, integration is nothing but once you get this money in an account through an online transfer, this money is considered to be good money, white money, and then you what you are doing is like you're using this money to buy some sort of assets. It may be a commercial property, it may be some sort of investments, it may be like luxury assets that you are trying to buy. Okay, now in this, what is happening is like from where it started. The concept was placement. Let's say after opening those accounts, bank manager got good business. Let's say after 3 to 4 months, these accounts are no more required. So what they'll do, they'll simply close it up. So they'll close it up so that if let's say bank internal audit is coming in or some external audit from RBI is coming in, they are not able to catch these accounts. Why? Because these accounts are already closed. So you see, this is what is very important to understand. Ki the entire problem of money laundering is only possible because one party, which is like a formal part of the channel, that is banks and other financial institutions, they are collaborating with these criminals, and hence only this problem is happening. So if you don't have it, no collaboration possible. You see, this cannot be possible. The same thing is explained here how banks are used by money launderers. There are three stages. One is placement, where you bring in cash, bring in heavy cash. Okay, and then you second is layering, where what you do is like you're sending funds to offshore or onshore locations. Okay, and you are creating so complex financial transactions, taking loans, and then yes, sometimes in order to show your financial transaction, you take some dummy loans also, which you actually don't require. But just to show the source of your cash flows, you're bringing in lots of complexity. And what is happening is like you're putting up lots of layer onto your black money so that authorities are not able to track it. And finally, it leads to integration where you buy businesses, you buy luxury goods, you buy commercial properties, residential properties from some money that you have in your account. And hence, you see what is happening over time is like earlier income tax return filing was very easy. Now it has been made very complex, in which they are asking you about what was the property that you are holding last year, any big transaction that you have done, any luxury good that you are buying, any property, any vehicle that you are buying which is very costly. They are trying to ask you this information. If you disclose it, you see they are able to track it. Till last year, no such information was there. You don't have any source of income, you don't have multiple accounts. But this year, when you're doing it a big transaction, how you're doing it, so you see system is also upgrading. Authorities are also very intelligent, and then they are trying to catch it with their like artificial intelligence software. You see, PAN number is a key here. PAN number is permanent account number, which is there mandatory for everyone to have it. So if you have your PAN number, you open, let's say you open 10 different accounts in 10 different banks, same, in order to do some sort of wrong reporting and all. Now you see what will happen nowadays is like income tax authority will track all your interest earning from various accounts across banks, and will be getting it clubbed together. This is data integration. They will be able to do it using technology, and when you're filing your return with some undervaluations of your interest earning or any other income, you see they'll simply let you know that there is a fault, and they'll map it and will ask you for an explanation. Hence you see now it is more tougher for chartered accountants and money launderers to escape from the government authorities. Now let's go into the legal part of it. Prevention of Money Laundering Act came in year 2002. Why it was required is like you see, we would like to bring in a law in place which stops bankers, money launderers to do what is unlawful. Here you see Wikipedia link is mentioned. You can go through it. You'll get every detail related to Prevention of Money Laundering Act 2002. Okay, the idea is the main objective is to prevent and control money laundering, to confiscate and seize any property which has been bought or sold due to this particular element of money laundering money, to deal with any other issue which is related to money laundering in India. You see, India is a very big country with lots of politicians involved in black money and the related circulation. And you see, we have put in severe punishment for people who are involved, caught involved into it. So there is a rigorous imprisonment from 3 years to 7 years in a normal case. And if you see if the crime has some element of let's say you have narcotics, drugs, and psychotropic substances act under the psychotropic substance act 1985, if it is found that you are dealing in drugs or something which is prohibited, you see, then in that case maximum amount of punishment can be extended up to 10 years instead of 7 years in a normal case. Okay, so 7 years to 10 years is a serious thing. But you see somewhere down the line, on one side you don't have anything, and on other side you have a 10-year punishment. You see, people are little bit cautious, and then they avoid it. Now in criticism, in a later part of this particular presentation, you'll find criticism is like the, like you see, conviction rate is very low in India, even though this law is there from since 2002 to 2022, almost 2 decades. But if you see, conviction rate is very low. People are never been caught. Even though there are so many cases going on, but proving it is very tough, and hence people are not getting the right punishment. And environment needs to have something very strict on this. Okay, then now next agency is Financial Intelligence Unit, IND. This is like again a special institution which has been constituted by Government of India, is working under RBI's direction. Now you see, this is a central national agency which is responsible for receiving, processing, analyzing, and disseminating information relating to suspected financial transactions. You see, being a banker, ex-banker, I can tell you, like there are certain formalities that you have to do every month. There are some transactions which bank manager may feel that they are suspicious in nature, may lead to some sort of connection to the money laundering and all. So every bank branch has to prepare this report of those suspicious transactions where cash volume has either withdrawn more than 10 lakhs or it has been deposited with more than 10 lakh rupee of physical cash. You see, we have to report these transactions to income tax authority, and then what they are supposed to do is like they have to investigate these transactions. So it is nothing but we are trying to investigate all the suspicious transactions in order to ensure that they are done in right manner with legitimate money. Okay, Financial Intelligence Unit, IND, is also responsible for coordinating, strengthening efforts of national and international intelligence. So it is our, you see, again, we are not working only in India, but we are trying to collaborate with the international agencies also on this area of money laundering. Investigation and enforcement agencies, they put their like they collaborate with global agencies. And you see, so it is like in India, it is headed by finance minister. So criticism is again what is very important. Conviction rate is less than 0.5. Means out of 100 cases, only half is your conviction rate. So it is very low. Mainly, it is like what again. News articles will let you know that most of the time it has been invoked against a political rivalry. like person who is in power, party who is in power, will try to use it against their opposition. And most of the time, the worst part of the entire scenario is like, so most of the time people don't know for what allegation like are there on them when they are put into this case as an accused. So you see, you don't know for what charges are you being like convicted. Now this is a reference section of this particular topic of anti money laundering or prevention of money laundering act. You see, this is taken from the source Wikipedia. So so many like material, so much of material is available. So you just go through it if you want more details. And with this, thank you. Take